In this section we're working with the Kennedy channeling technique, and what I'd like to do is actually apply the technique to a real-time price chart. Now, as you can see from this low here, the Elliott waves are fairly pronounced. Here's waves 1 and 2, 3, here's a fourth wave decline, a fifth wave rally, and that's followed by a three-wave decline ABC. So here's the basic structure we're working with. Now from the channeling technique, I'd like to go ahead and apply that and show you how dynamic it actually can be. Okay, here's our base channel. In our base channel, again, you draw your initial line from the origin of wave 1 to the extreme of wave 2. Take a parallel of that line and extend it upward to the extreme of wave 1. So here's my waves 1 and 2. Okay, once prices begin trading and penetrating the upper boundary line of our base channel, then we know that wave 3 is indeed in progress. We also know that the base channel, more often than not, will provide support for wave 4. As you can see, it clearly did in this instance here. We came right down to the midpoint or the center line of our base channel and then turned up. But before I get too ahead of myself, let me clean this up a little bit and redraw those lines. Again, this is our base channel. There we go. Here's our base channel. And again, once we break out of the upper boundary line, with confidence we can identify the ensuing price move as a third wave. So here's waves 1 and 2, here's our base channel. Now as wave 3 develops, what we will do is draw another channel here, and that will identify, that's the acceleration channel, that will identify or encompass wave 3, the price action within wave 3. Once the lower boundary line of the acceleration channel is penetrated, then what we can at that moment do is identify wave 3 as complete. I'm sorry. There we go. So let me just highlight some strong points with regard to the application of the channeling technique. Once prices move above the upper boundary line of the base channel here, we know with a high degree of confidence and a high degree of probability that the ensuing price move is indeed a third wave. Once prices break the lower boundary line of our acceleration channel, then again we know that this is actually a fourth wave pullback. Being a fourth wave pullback, we also know to look for support for wave 4 at either the upper, mid, or lower boundary lines of our base channel here. Okay? So we know with confidence at this point that this is a wave 1, 2, 3 into the high. Now I don't have much price action to work with here with regard to the deceleration channel, but just to kind of give you a rough idea, it will encompass the bulk of wave 4 because again, corrective price action or a counter trend move tends to be contained by parallel lines. And again, you saw how the base channel lines actually provided support for this fourth wave pullback. Once wave 4 is complete, and the way we know the fourth wave is complete is when the upper boundary line of the deceleration channel or the corrective price channel is penetrated. So we knew wave 4 was complete when prices opened up the next day, which is what they did. And then we simply use our traditional terminating channel to identify resistance for wave 5. Now in this instance here, as you can see, prices penetrated the upper boundary line of our terminating channel. That's referred to as throwover and will sometimes occur as it did in this instance. But by using the channeling technique, what you can actually do, it can clarify unclear wave structure. When prices begin to break out of the base channel, you know that a wave 3 is in progress. When prices penetrate the lower boundary line of the acceleration channel, you know that wave 4 is in progress. When the upper boundary line of the deceleration channel is penetrated with confidence, you know that wave 5 is in progress. And then as wave 5 begins to develop, you can identify resistance in this instance for wave 5 by utilizing the terminating price channel.